Gold continued its downward journey last week and produced the third bearish candle in sequence here. Three bearish candle sequence. This sequence is done. Now, can we expect a reversal? Or is it going to fill this gap here at around 1860, 1870 levels? Which position we should take trading gold next week? We will see with the help of charts followed with indicators, and towards the end I will give you the trading levels and summary for the next week. Do watch till the end. Do like, share, subscribe, and comment. Your every action, every like, every comment, every share is a great inspiration, motivation, and support for me as well. Yes, and this is a great support for those who join this community, because when I provide my twice a day analysis, definitely it helps value in your day trading decisions as well. So do like, share, subscribe, and comment, and press the bell icon, which keeps you informed and updated about the twice a day analysis which I share for gold, first with the Asia session and next with the US session. With that, let's start. First we look into the daily charts here. See, on the daily charts in my multiple analysis every day, I have been sharing this, that gold is trading in this bearish channel more or less, and it is, see, beautifully it has followed the channel throughout this week. You can see all the candles almost beautifully aligned, the highs are beautifully aligned, the lows are aligned as well. Now if you note here, the last candle did not show any interest in going further down. This is a very important point. The last candle did not show any interest in going further down here. It failed to break past the preceding lows here. This is important. At the same time, it did not show any interest to break the highs of the previous day as well. Also, one must note that the size of the bearish movement, it is very minuscule movement here. We have not seen, whenever it has dropped, but achieving lower lows. However, it has also achieved the highs here and showed very small movement throughout this week. You can see the complete movement is limited between 1920 to 1835 levels, 1885 levels. This also suggests that the bearishness in some sense is getting diminished here, but at the same time, one must note that it has breached the critical support levels here. 1920 was definitely a good support here, and then it is now staying below the previous lows which it has achieved few weeks back. Now if you look at the daily charts on the distance past, you will find this is the gap which I am talking about, which is precisely positioned at around 1870 levels. So this is a gap here, and below which this is the double bottom levels from which the rise has started. So in sum, it could try to make one attempt to fill this gap. There is a possibility, and in fact create further lows. However, I still have a doubt that it is going to break past this double bottom levels. But these are markets, we have to be watchful. It is certainly creating lower lows. We have seen it breaking these lows. It can break these lows as well in the near future. But let's have a more detailed. Let's move to the weekly charts. On the weekly charts, if you observe it more closely, you will find, if you just connect the highs here, you will find, see, these the tops are beautiful connected, and if you draw a parallel to this, you will find that this is trading in this channel. See, achieve the bottom here, retrace till the top of the channel. Now again looking downwards. So I will definitely observe where it gives a sincere attempt to achieve the bottom of this channel next week or not. Now bottom of this channel is right now situated at around 1850 1840 levels. Definitely 1836 is a great support level for gold here, breaking below which is where further bearishness is going to prevail. At the same time, any move above 1950 is where the bullish reversal should be considered, and we should think it of as seriously that it is reversing, and we should not try to sell at those levels. But before we also look at these three candles here beautifully creating the bottom here, beautifully creating the triple bottom here. And this is also an equally critical level for gold. Only if it breaks below this, you can say 1800, you will find gold as trading bearish in the near term. So there is still a probability that it may continue its downward journey. Also look at this, the candle size is almost same, and this suggests that there is still bearishness. However, the last candle on the daily charts, as we discussed, suggested that after these three consecutive red candles, there is a possibility of it showing a retracement candles. It can try to retrace a little, maybe till towards, gradually moving towards 1920, and then continuing with the drop on the downside. So this is something we should watch out for. Also, let me show you one more thing. See, this is first, uh, this is a good pole here, and this is a good flag here. So this is still continuing to form a pole and flag formation, which suggests that it is still bullish in the long run. Long run, when I say, you have to see the bottom here on the weekly chart. This is also triple bottom level at around 1600. And even if you discount that, because see, after this formation, it has also formed this bearish channel, then retraced to the highs. Now it is just extending this the same drop. So precisely, I do not see it breaking below these lows here at 1800, 1820 zone. And because it is, I will show you on the monthly charts and the indicators why it could resume its downward journey very, very soon. So this is the similar formation here. Only thing which is to be noted here, see, it was trading in this bullish channel for weeks, and this time it has breached the channel, it has extended the drop for a little while. This is the only point of concern which is suggestive of little more bearishness. Now let's have a look at the monthly charts. On the monthly charts, one very important point here is, see, the opening of this candle was almost flat, and the preceding candle was a swing candle. You can see it has created higher lows and higher highs. This candle resumed its downward journey continuously from the beginning of the month itself, and in fact it has breached the support levels here and the higher lows here. Now this is resumed its, you can say it is indicated that now it is in the bear trend. So possibly now complete reversal beyond this zone is something which I think is not going to happen. But yes, these are markets. Any event, any news may also create this reversal, but we will see with the indicators that what it is trying to. Right now it is continuously trading bearish, and if you look at this complete chart as a building, you will find that after creating the top, possibly it is trying to create this bottom here. So I will be definitely cautious for next week also as well, and in fact for next couple of weeks it can produce similar red candle here, achieving the bottom. So this is something which we should be careful of, because right now we can see there is a downward pull, there is a consistent downward pull. It can produce a similar candle here, which suggests it can try to continue with the downward move, achieve 1836, 1820 levels in couple of weeks. We have to be watchful here. Now let's have a look with the help of indicators. Now see, indicators on the monthly chart, these are the 20, 50, 100 period moving average. Now prices were too much divergent from the 20 period exponential moving average. What it is trying to do, see, whenever we see a divergence to the moving averages, it always tries to converge, and that is what is happening. It is trying to converge till towards the 20 period moving average, now sitting at around 1860 and 1850 levels. So this is the zone where we have got the first support. Now see, we have seen 1870 as the gap, 1860 as the 20 period exponential moving average, and then below that still there are great supports till towards the first 1836 and then 1820 levels. So these are the support levels which you should note. Breaking below each of these levels will certainly bring more bearish there. Yes, it is just trying to achieve the 20 period moving average. That is the first expectation, because see, here also we have seen it achieving the moving average, and we have seen it reversing sharply and trading continuously trading in this bullish channel and continuing its bull run. So I will definitely observe first at 1870 if it continues the drop, second at 1850, 1860 levels, and then 1836 below that 1820. So these are the support levels which we have got so far. Now look at monthly stochastic. It has also dropped. It was overbought here. And if you look at the stochastic, see, it always tries to achieve the bottom here. This time it was overbought, this time it was overbought, and it is tried to hit the bottom. So let's observe more here. But there is one important point on the MACD is the crossover here, and it is continuing in green here. Now you can see this crossover, first of all, the bullish cross has happened here during the COVID times, and since then it has stayed bullish, then the sharp drop, and now it is crossed over again after staying bearish for months. Now this is getting critical for gold here, because see, it is already showing a sharp convergence here. See, it was trading in this green here, the candle size has diminished and staying bearish this month, may try to further increase the chances of a crossover on the sell side for the forthcoming months. So we have to be careful for this month. Where this candle closes is going to be of prime importance to us. Stochastic is now looking downwards here on the monthly charts. But let's have a look at the weekly charts. On the weekly charts, see, prices were divergent from the 20 period. It has converged till towards the 20 period. Now, in fact, it has breached the 20 and 50 weeks average and it is looking downwards. Now, the 100 weeks average, it's sitting at around 1850 levels. So yes, another support level you have got 1870, 60, 50 is done, then 1836 and then 1820, 1800. So these are the support levels on the downside we are getting. Now on the upside, now look at the moving averages. It is converging on the downside. It is started to converge on the downside. Bearish sign here. Now this zone is going to be a great resistance here. We have seen that is also the top of the channel. We have seen this is also the 20 weeks average, and hence any move above 1940 1950 levels is where the bulls will try to take over. Right now it is still bearish, or at the same time one must note that why there could be a pullback on the weekly charts. You can see three red candles are done, and this is a sequence or a pattern here that in general after three red candles it tries to show a pullback. Now see, it is also traded outside Bollinger Bands, and that is why we can see it closing almost precisely at the bottom of the Bollinger Bands. I will definitely watch out how the next candle behaves. Certainly, even if it tries to show a drop, it can try to, again resume its or show a pullback towards the end of the week. Very much possible, and close well within the Bollinger Bands. This is something which I expect. Now let me show you something. See, whenever on the weekly charts it tries to stay above Bollinger Bands, it has always shown a pullback and has closed within the Bollinger Bands. Even when it is stretched a drop on the downside, it has always shown a pullback. Now you can refer these here. It opened outside, achieved the lower levels, and then showed a pullback. So this is also very much possible. And what it could try to do, fill the gap at 1870, 1860, and then achieve the 20 weeks average at around 1860 levels, touch those levels and bounce back towards the end of the week. We can expect that also. Closing within the Bollinger Bands is something which I expect. So this is something you should note. Stochastic has dropped. It has come back to oversold zone. The MACD stayed bearish. It is divergent. It is bearish. It is looking downwards. If you look at MACD, drop here, retracement. See, this is the first wave you can see here, or rather I will say this is the first wave where it has created lower lows, then the second wave with the higher highs, and the red part of this wave is continuing here. Now note that though the ground on the downside is wide open, yes, it can try to hit the bottom here. However, there is too much of divergence. Whenever we see divergence here, there is probability increases that it might converge, which also suggests that even if it tries to achieve lower lows here, tries to hit 1870, 1860, in fact 1850 levels, we may see a pullback towards the end of the week. You have to remain cautious, and then it may try to converge. RSI is looking downwards. It is also signaling bearishness. Coming to the daily, look at the daily chart. The 20 and 50 crossed over here. The 50 and 100 crossed over here. Now 20 and 200 are going to cross over. Now remember, this is a bearish sign, this is a bearish sign, and all three are trading with divergence. This is strongly a bearish sign. Now 1920 is the first resistance on the upside, then 1930, and then 19. You can see here 1940, which was the earlier a great support, is now going to be the ultimate resistance, where we can see all the moving averages are situated between 1920 to 1940 levels. Also, this is the top of the bearish channel on the weekly charts, and hence we have to remain cautious alert. Even if it tries to rise, these levels are going to play critical roles. So on the upside, now we know first resistance it might face at around 1900, 1910 zone, then 1920, then 1940 levels. So these are critical resistances. Now see why it could show a pullback. Stochastic is consistently staying oversold. So in my experience, gold has stayed or stretched this oversold regions. Even whenever you see it overbought, it always tries to show pullback. whenever it shows the oversold levels, it tries to show a pullback. So yes, this also suggests even if you see it filling the gap and trying to drop earlier in the week, possibility of it to resume the upward move is very, very strong. Now MACD on the daily charts is again has shown bearishness here. See, it has achieved the bottom here. It has in fact breached the lows here. So here also the possibility for it to converge exists, and then we can expect it to retrace. RSI has hit a oversold levels here on the daily charts as well. Now we have seen the charts, we have seen the indicators. Time for me to define the trading levels and strategy for you so that you can trade profitably, trade comfortably. And before that, I will summarize my observation here. This summary is very, very important. And before I give you the summary, I have couple of offerings. First is my mentorship batch. The 25th batch is going to start on first week of September. Only limited seats are available. Register yourself now itself. Reach out to me for more details. My Telegram and email IDs are mentioned in the channel and video description. Equip yourself with the tools, techniques, and strategy which can help you become a profitable, proficient, and an independent trader. Reach out to me for more details, and yes, you can be part of my Signals channel as well. With that, see, my observation here is, first of all, we have seen a good enough bear run in gold. Yes, it has come to a support levels. Yes, there is a gap on the downside which needs to be filled at 1870. There is a moving average lying at around 1860 which it might touch, and on the daily charts it is now running oversold. MACD is also oversold, and this there is a strong probability, there is a strong chance, yes, it is also at the bottom of the Bollinger Bands on the weekly charts. So there is a strong probability that even if it shows a drop earlier in the week towards 1870 1860 levels, I see a very strong pullback towards the end of the week or from the middle of the week. So initially, even if it shows a drop, yes, there should be a pullback. That is what is my expectation. Yes, it is running oversold, and hence the downside is limited. And on the upside, there are greater resistances available for gold. On the upside, you can find out 1900 1920 zone is where the maximum resistance is there, and beyond that 1940. These are the two levels. If it breaks past by, you can expect a reversal maybe from next to next week onwards. On the large run, it appears that right now it is resuming its bearish run here, and even if retracement or a reversal confirmation is only if it stays above 1940 1950 levels. So with that, first let's talk about the buying levels here. I will recommend you to buy gold. See, these levels you should note, and you should also note the critical levels on the upside. 1896 you can buy. I will expect it to get first resistance at 1904, then 1910, and then 1920 levels. Now remember, this is a complete zone. This is a complete zone where you will find strong resistance on for gold staying here. 1920 definitely is going to be a good great resistance. Beyond that, we may see it achieving 1940 levels, the strongest resistance on the up. Firstly, a possibility for it, see, till 1920 we can still expect, or we can still consider gold as 60% bearish. It is only 1940 levels above which we can expect, we can see gold as 50-50 situation where we can see it either which ways. This is the zone 1940 and then 1960. This is a zone where we should treat gold as, we should remain neutral on gold. It is neither bullish nor bearish in this zone, and this is the next resistance zone. If it and only if you see it staying above 1960, sky is the limit on the upside. Hence you have to be careful of this. Now on the downside, I will recommend a sell only and only if you see it now trading below 1884 levels. Below this, you can expect 1878 and 1870. Now remember, 1870 is the gap which it may try to fill, and this is the first stronger support, and we know now 1860 is the next stronger support. So these two levels we should be very cautious of, even if it tries to achieve these levels. So see, if it is in a mood to fill the gap and continue its bull run, I will expect it to show a bounce back, and this will also fulfill both the conditions because it is oversold on the daily charts, and because it has to fill the gap, it may try to resume its downturn, and maybe 1 or 2 days in the beginning of the week it can show bearishness, fill the gap, achieve the levels and show a bounce back, where we can again expect it to retrace till towards 1900 1920 zone towards the end of the month. We have still 9 trading sessions and it could recover strongly and close at around 1920. There is a possibility for this. Below 1860 is where the bears will try to take over. I will look forward to 1840 1836 level, which I do not think that it is going to break in the month of August. Below this is 1820 and then 1800 is the ultimate levels. I do not see it breaking these levels, but I am giving it for you. Next 2 weeks, I do not see it going till towards this zone. But then you have to just note the levels in case, because these are markets beyond you and me, it can give you a sharper crash also. Take your positions accordingly. Trade with a stop loss, trade with a trailing stop loss. Do like, share, subscribe and comment. Join my mentorship page, join my signals channel. Reach out to me for any of your trading or trading queries. My Telegram and email IDs are mentioned in the channel and video description. Thank you very much. Have a great profitable trading week ahead. Do stay tuned with the twice a day analysis every day for gold. Definitely it will be adding value to your day trading decisions. Thank you.